Sir, surely Bed Bath is trading on fundamentals, Peter.
There's a lot of them out there right now, Kelly, that just, I think because they have such high beta, let's not confuse underdogs, that stocks that you think have a great chance with losers, where stocks that just, no matter what interest rates are doing or no matter what the economy is doing, they're just not going to catch a tailwind on that. And I think there's been a lot of confusion. I think a lot of investors have just looked at the bottom pile and said, when there's risk on, let's just fill our basket with those stocks. And I really disagree with that strategy, because not all of them are underdogs. A lot of them are just simply companies with bad business plans that probably will file for bankruptcy eventually.
So what are the companies, that you want to stick with, that you look at here and say, especially at a time when the S&P's multiples we were talking about last hour has climbed back up to 18, pretty fairly valued?
Very fairly valued, and it is getting more difficult. But, I stick with some of the names. I only own 14 stocks. And I will tell you that I haven't done one trade out of that portfolio since the beginning of this year. I'm very, very patient. And an excellent example that's quite timely in the news was the Trade Desk. If you remember last week, it reported earnings. Revenue is up 35%. The Trade Desk does targeted digital advertising on connected TVs, and it has been the underdog of that business. And yet revenues were up 35%. And just because of that news, Kelly, the stock rallied in one day almost 40%. So there is some hope out there that there are companies that people are starting to look at, and they will say these fundamentals look excellent, in spite of the fact that they're fighting against a lot of headwinds given the competition.
So you have 14 stocks. You haven't made one trade all year. What do you do all day, Peter?
There's a lot of deep thinking with this. I will tell you.
Deep thinking.
Deep thinking.
I see, deep thinking, yeah. So chin
also,
stroking.
Tyler, I have initiated a shorting campaign, so I have been spending a good deal of time finding companies not to hedge against the portfolio, but companies that I do think are actually poorly run. And in spite of, say, if the Fed eases on interest rates or if the economy brightens, I don't think that these stocks should catch that benefit. And I do think that they should continue moving down.
As you look at those 14 stocks, what is your biggest single holding, if you can release it? I know there's sometimes your biggest single holding. What percentage of the portfolio is it? And what is your annual turnover rate?
Yes. Okay. Well, first, in reverse order, my annual turnover rate is about 25 to 28%. So that shows you the patience.
You own the average stock 4 years then?
That's correct. Yes. And you might think I have a lot of spare time with that low turnover. But seriously, it is a lot of hard work to continue holding your conviction with these in the face of many, many criticisms about some of these companies that are not what people would think are underdogs, but are failures. And the top holding currently is Palo Alto Networks. I think I've talked about that, frankly, for years. This company is spectacularly run. It's in an industry that we've talked about in the past in terms of it's inelastic. So no matter what is going on out there, when you look out your window or you look across the world, there will still always be a tremendous need to protect against cyber attacks.
Shepard Smith here. Thanks for watching CNBC on YouTube.